Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, March 9th, 2023. In this video, I'm going to go over the semiconductor stocks via SOXX, one of the big semiconductor ETFs out there, as well as some of my top picks in the sector for those that want to either trade individual stocks in lieu of an ETF. Or also to really, I like to do that as well because, as I often say, a sector or an index is simply a sum of its parts, meaning the components. So if we look at the what I'll do here, the top components of SOXX and the semiconductor sector, that'll help to support a case, in my opinion, to be long or short. And as I continue to maintain, I think, and it's certainly been the case for the last couple months here, individual security selection and/or individual sector selection versus going long or short the broad market is the way to go until we start trending. The market's been consolidating for a while. So what I'm going to do real quick is start out with the big picture of the market itself. This is SPY, the S&P 500 ETF, and just a couple things I want to talk about. This is the last real bear market that's been in recent decades. Going back all the way into the 90s, there's been, in my opinion, two bear markets, and I believe we're in the earlier stages of the next one, which is right here. By technical definition, the COVID was a 36% drop, but it was over before we knew it. It was a total of 6 weeks. Fourth quarter, excuse me, of 2018. We've had some corrections certainly along the way, but these were the true bears. In over 50% drops and clear downtrends that lasted more than a year instead of just several weeks or months. So, all right. So, and one of the things, and of course, we can sit here all day long and say, well, this is a bear market, it has more to come or not. There's other things I look at. One of those being the PPO right here on the weekly chart. The zero line right here on the histogram, you can see helps define those trends. When the histogram crosses down in trades below, in other words, it's negative, you have a bearish crossover, and the PPO line is trading below the signal line, that's when the histogram is red, you're in a bear market. And you can see they do a pretty darn good job of defining those trends. And so even the corrections, again, you want to play the semantics game, whether it's a bull correction or a bear market, the old school 10% or more drop, or 20% more, gives you that definition. We certainly had that on a lot of those. And there it is. So we are still below there. I wanted to point that out. And a lot of times in a bear market, you get bear market rallies and the histogram will come up, the lines will come up, or the histogram will come up, and then you get rejected with another thrust down. So that's what I suspect is the most likely scenario. But again, I'll take it day by day, week by week, month by month, and we'll see how this develops. The other way to look at it as well is the PPO line. Here's the PPO. You have the blue line, the PPO line, and then the signal line, which is the 9 EMA. Is the white line. And when that is above or below the zero line right here, then that also shows you the trend as well. And you can see right now we're currently testing that. This is where the PPO signal line crossed down, made a bearish crossover. There's where it did in the last bear market early on. So you start out initially with a correction, and then that correction morphs into something more. And so, and historically on those previous two bear markets, you can see during the corrections we had those pullbacks, and that zero line, the one I highlighted here, often acts as support or resistance when tested from below. So not only does it delineate bull and bear markets, whether the 9 EMA or the signal line's above or below it, but in bear and bull markets, it often acts as support when back tested. And that's what happened on each of these, which again, call them corrections, call them mini or micro bear markets, whatever you want. Again, that's semantics. They were certainly worth noting and trading short and getting out of long, but that's all they were. And now we're right there. So, we're still at a very important technical level in the markets that really could help define the longer term trend. And then finally, again, this is a monthly chart I'm on. If I said weekly before, I please, I'm not sure if I did or not, but I just want to make clear I'm going to get to the weekly. This is a monthly. And then there's that 20-month exponential moving average, a blue line that just does a phenomenal job of defining bull and bear trends. Simply, when you're above it, you're in a bull market. When you cross below on this monthly, and you have a monthly solid close on the monthly candlestick below it, you've entered bear market territory. And this is, like I say, I call this probably the single best 401k indicator out there. For those of you that aren't active traders, just want to outperform the market, not get clocked, and give back years of gains in bear markets, well, that's it. You want to be long when the S&P 500 and or the NASDAQ 100 are above this level. And when you get a solid monthly close, a sell signal, you want to be short or out of the market. It's that simple. There was your sell signal. There was a back test rejection. That was the great bear in 2007 to 2009 right there. And as I've said recently many times, we took it out there, solid sell signal, and have been back testing it since, and we're still below it. So by that metric, that again, no one indicator is perfect, but if you're using this as a guide for 401k longer term money, it says, hey, until that level's recovered with a solid monthly close back above the 20-month, then you might want to be either not fully long or fully invested in a 401k. It's up to you. There's many indicators, and like I said, this one here, these lines could bounce, so you may want to go off that one. That will just give you additional evidence. If we do have another leg down, get rejected off here, you get a big red candle, and then that signal line crosses over down below. Then on the weekly chart, you can look at similar trend indicators. This is my busy board. I don't know if I have a clean board on the weekly, but let me just show you one single, and again, fairly simple indicator. It's a histogram. Same thing, PPO. There's a zero line, and when again, I like to use the signal line, the 9 EMA, because that's the last of the two to cross, and it's pretty simple but effective stuff. When you are, when the signal line is above, the trend is bullish and you want to be long, and when you cross below, there was your bearish cross right there, and that was early on in the 2007 to 2009 bear market, so you were able to either avoid most of that 57% drop or capitalize on it by being short. And then it said, guess what, bear market's over. At least this one indicator said right there, and it got you back in, and successful back test. That was a 22% drop, so that's not a whipsaw by any means. It said, hey, we went down correction mode. Again, this was a 15, and this was a little better than 15. Many indexes had a bear market, and this was a sideways to down market for 18 months. So it got you out of that, which would have, and you can see on the back test it got rejected. 21% drop right there, roughly. And so not a whipsaw by any means. 36% COVID. It's not going to get you in at the top or out at the bottom, but here we are right there. There was your sell signal more recently. Again, I have all these marks here. This is where we're at now. And you can see the weekly PPO signal line back testing. So if we get rejected here, which I think is a most likely scenario, you can see the PPO line itself starting to roll over and turn back down. Then the bear market will resume. So, and I can sit here all day long and go over those are the cases, or some of the case to be made for the bearish case, and then the bullish cases I've talked about repeatedly lately. We've broken out of the primary bear market downtrend line as well as the 200-day moving averages, and we successfully back test both recently. So again, that will further increase the odds, because if we take out the 200-day simple, we take out the downtrend line, fall back below it, then you are going to have a rejection. If it happens soon, that is, you'll have a rejection here on the zero line. So that's bigger picture, and again, helps formulate whether you want to take long, short. At the end of the day, the market's still trying to figure out which way it wants to go. It's been kind of bouncing around in a range here for weeks. I just gave you my thoughts, and I'm leaning towards that downside scenario, certainly not married to it. Now let's get to the semis, and I'll give you some trade ideas. All right, SOXX. This is the semiconductor ETF. There's a couple out there. You can use XSD, SMH, SOXX. They even have a long and short leveraged version of this one. SOXS is in Sam, and then XOXL is in Larry. Those two are the long and short, or short and long in that order. And so this one I did that video back on February 8th covering the private equity sector as well as the semis, and said I believe it's an objective short here at resistance. That was about 475, give or take right there. And or I said if we want to wait for the more conventional conservative approach, wait for a break of this uptrend line right there, the wedge, which we got. And then we went on, we hit my first target I laid out in that video was 410 right there, the 410ish area. Bounce back, and we're right back to where we started. So if you took profits there, like I said, objective re-entry. If you didn't take it at all, objective re-entry. If you covered and gamed the bounce, objective time to get out and then get back in with a stop. Get back into your shorts, that is. And look, where your stops are will depend on where you're going from. I laid out a total. I added some additional targets and sharpened my pencil on this since the last video. So I have a range of targets now. T1 was already hit, so I have T2 down to T6 right here, which would be next. And the way this works, if you're only looking for a move down to T2, then you measure that, and if you short it here today, you're looking at a drop of about 7.5%. Therefore, you probably want to keep a relatively tight stop, not much over those recent highs, maybe even a little bit below that to give yourself a nice risk-reward ratio. If you think that, like I do, that there's a potential for a lot more downside, let's say T6 is hit anytime soon, then that's going to be a drop of about nearly 20%, and you could certainly give yourself more, but I would say I would still keep the stop relatively tight, maybe 4 or 5% stop, not too far above those recent highs, because if that happens, the semis rally, that's almost certainly going to coincide with the S&P 500 and NASDAQ 100 holding above the 200-day moving averages. So I want to see if this plays out, we start going down here, the semis go down, they will most likely, whether it's sooner than or later, the market will most likely follow. So therefore, I wouldn't give no reason to give this one too much room here, because the markets could rally and explode off here, especially if the Fed starts to pivot and recant their hawkish Powell's hawkish statements yesterday. Anything's possible. All right, but I do like this sector, and that's why I'm doing the video. All right, so let's look at the longer term chart first. All right, this is when I scroll back all the way to the beginning of, again, I speak in different time frames, not to sound confusing, but I still believe from the longest term perspectives, I have a lot of long-term trend lines in many sectors and even the indexes that were just recently tested or held. And by that metric, this is just one ginormous secular bull market. And even what we've seen so far, although it measured well over a 20% drop, especially in the semis, could be considered just another correction like these. That was 27, 39, 28. Another correction within a bull market. This is a long-term bull market uptrend line in the semis right here that I just drew. And that's also what I've laid out about the time this bear market started. I gave you two long-term targets on the weekly. T1, which was hit right here, and then T2, which is the 271-ish price support level. This previous reaction high right from just before COVID. That was the COVID drop right there when everything shut down, and then you have the intersecting uptrend line. So the first they come in together roughly, and we would probably, my guess is, overshoot the trend line if we had a lot of momentum heading down there, maybe come down to that 271 level. But just to kind of put it in perspective, that would be, if hit, a drop of about 35-37% or so from where we're at now. And you can see, and these are old levels here, I've had these for a while, S1, R1, that means support. First support from up here, and then support once broken is resistance. So S1, R1 means support resistance line. Previous reaction high, and that's it. So, if the semis break that, then that's bullish. There's a trend line here you could also extend. And if they get rejected, they break below that, and they break below the former T1 that was support, and still is. I think it's a very significant level. That would open the door. It's sharply increased the odds that we're going to go down and hit that target. So that's big picture, And then, if you want to trade what I like to call the micro squiggles, this is just what I do. I'm a swing trader, is why I list multiple targets. I will assess as and if each one is, as we approach each one, whether a bounce is likely and worth covering shorts and gaming a bounce, or just covering the shorts and then re-entering on a bounce back at higher levels. So we'll have to get there again, assuming we even do anytime soon. But of course, I wouldn't be doing this video if I didn't think there was a decent chance we would. So there it is. There's your targets. Not much more to say than that. You short at resistance, and that's it. Individuals. NVIDIA. Okay, I'm just going to go through these relatively quick. I told you I would highlight some of my favorite picks in the sector. That's a nice, clean, bearish rising wedge, complete with negative divergences right there. Just like you had a similar wedge type pattern there. With the divergent high and negative divergence, and then the trend line break, and that trend line break, and it was price support as well, 169.50, and that was good. If you waited for a break of that trend line there, that was good for an 18% drop from the highs, from that divergent high. That was good for about a 26% drop. So here we're at with both negative divergence, and there is some resistance there, minor resistance, but pretty decent, minor to moderate, about 240. So this one I think could be taken here. What I would do at this point, since you have a pretty well-defined uptrend line, at most maybe a half starter position short on NVIDIA, and wait for the trend line break. I believe I have an alert. I know I've set them on some of these, and I'll go ahead and just reset that. Targets, 209, 181, 80-ish, and then 140 would be my max target at this point in time. That would probably also come in with a back test of this longer term downtrend line right there. I'm going to go over on some of these big names, because this is the king of the sector now. Intel has long since been dethroned as king of the semis. So NVIDIA, it's a $580 billion market cap company, and Intel now is only $107 billion. So that's lots happened in the last few years. These are targets that I laid out before, right around the beginning of the bear market. And this one's played out very well. This is, again, bigger picture. This speaks more to the trend trader than the active swing trader. T1 was hit. We had a bounce. That bounce doesn't look like much. We're looking at a weekly chart on log scaling that was well into the double digits. You were able to game a bounce off the initial tag. Then we hit T2. That bounce is still in play right there. And we hit T2 to the button, and there was really good support. So it was a very objective time to cover and or go long. And then and that's it. So the $1 million question is that it? Are we going to get any more than that? Sometimes my final targets aren't hit, or we're going to take another leg down. If we do, we've already had the typical reaction off T2. Might get another one, but ultimately, since T2 has already been hit, if we get anywhere near it, I think ultimately it goes, and that opens the door to T3, which is down here about $73. And if T3 is hit, my next target, that's about a 70% drop from where we're at. And then if we are heading into the type of longer term, more secular bear market that I think we might be, which again will take years to play out, then I could see NVIDIA coming down to test its primary uptrend line. Most stocks ultimately do come in when they've set up a primary bull market uptrend line. In NVIDIA, believe me, the stock dropped 86% there, it dropped 90% there. To hit that trend line, again, depending on if and when it's hit, let's say it comes in with T4, which is my final target, primary uptrend line and or T4, whichever comes in first, that'd be about a 90% drop. So right in line with these two previous drops. So for those who think I'm insane calling for a 90% drop in NVIDIA, potentially, no, it's happened before, and to say it may never happen again, it's that old saying, those who ignore history are doomed to repeat it. So we'll see. And again, it wouldn't be a straight drop, trust me on that. It would take probably years to get there from that high, and there'll be plenty of bull market rallies in between, counter trend rallies to trade, assuming we're even going to get there. First things first, let's see if we get rejected here. Let's see if we get the sell signals, such as the trend line breaks and all that, and then we'll go from there. We'll take it one day at a time. TSM, Taiwan Semi, a little bit busy here. Let me just show you what stands out. We had a little wedge right here. We have price resistance right there, 90, about 97 or so. Got rejected there, took out breakdown on the bearish rising wedge, went down, took out the secondary trend line, and we're trading below it now, right above 87, 82 price support. There's really a support zone that runs down to about 83, 85. So once that goes, then this one's probably headed lower. It also put in a divergent high. Not one of my favorites, but one that I do think is going lower. Let me just see if I have anything on the weekly chart. Oh yeah, I do. TSM, this is a weekly chart. Goes back to the the bull market uptrend line from the 2008 lows. Remember, the Nasdaq 100 bottomed in November of 08. Everything in tech, most things tech. Every other index bottom in March of 09. So that's the bottom, and that's a beautiful trend line. We already hit it. And remember, I revised this. I had these potential targets, or still potential targets. I called it potential T3. But I made clear to revise before we got there that T2 was the uptrend line. That's the primary uptrend line, and or the nearby $60 support. I have it at 59.80 to the button. We hit that. Look at that. Again, that line was created, that was set back in 2020, August 21st, 2020, if you can see the pop-up box. And I was calling for the stock to get to that level, and then we hit it to the button. And what do? We bounced. These I list multiple targets. You get to T1. We bounced there on the initial tag, then we went down through it, hit T2, we bounced. And if this thing plays out like it very well could, well, we already rallied back. This was big resistance. That's why I had it color coded as yellow right there, 108.50. It was this whole topping pattern right here. It was really good support. And we just recently checked that, back tested it. So that should open the door for another move down. And if we get anywhere near T2, remember we already hit it once, that opens the door, increases the odds the next time around we'll take it out and then head down to that potential T3. All right, this is AVGO Broadcom. Okay, I'm just going to go to the daily chart here. Nice clean uptrend line, right? Very well defined. Negative divergence. We had a breakdown, back tested for a few days, went down, hit T2, bounced, went up, back test again. This is just a simple back test right here. Second back test. We had the initial back test right when we broke down, back test, and you can see this marginal new high, meaning a slight high over the previous high, has only extended or made that positive divergence even larger. That sets the stage for a larger drop. There's your targets, guys, all the way down. T5, my max target. If should that be hit, you're talking about a 20% drop in Broadcom. And if that gets hit, then I can guarantee you the semis are going down. Most likely, you're not going to see semis going up with one of these, these big leaders that I'm covering. I'm going through these in order of market cap right now, and I'm not going to go over every single holding, just the ones that I think stand out. ASML, you've got similar pattern. You've divergence. You had a minor trend line there that was broken. Secondary uptrend line right there, forming a big wedge. Breakdown, back test, rejection, breakdown on the secondary trend line at support now at about 609. That's really a support zone that runs down to about right here, about 593. So if and when that goes, there's your next stop about 562, 65, and then ultimately down here at about 516.23. Again, big negative divergence here, and that's a big part of my trading. I like to see these divergent lows to cover shorts and go long, and I like to see these divergent highs to sell longs and or get short. Divergent high right there at the top. TXN, Texas Instruments, primary uptrend line right here. Breakdown, back test, and you have a downtrend line right there. You had a false breakout recently. This is what I'm thinking, suspecting the indexes might do. Took out the primary bear market downtrend line. That one was not as well defined, but enough reactions. Also put in negative divergence, so it wasn't just random. You had the negative divergence right there. So not one of my favorites either, but if it does get rejected and the semis move lower, there's your target right there. I'll give you a sold target. Well, I'll give you two. Again, not my favorite. I'm not taking this one, but I might add it on. I have some of these other individual ones I'm layering into these guys. 160 would be the ultimate final target, and next pullback, next reaction probably there about 168.70. Qualcomm, this one's was recently rejected 138 resistance, has a little downtrend line right here. Let me see if there's anything on the longer term charts. Yeah, there it is. So there's your downtrend line. I'm going to take this downtrend line now, or what I'll do is I'll add a secondary, a benefit of the downtrend line, and I'm going to come in, I'm going to capture that high, the all-time high, that secondary high right there, that reaction, and then that candle there. Most important thing that stands out, this was a divergent high right there, big negative divergence on the weekly chart. And again, if going off that primary thesis or working theory that we're in the early stage of a bear market, this one's dropped 46%, 47. You might be saying, well, yeah, isn't that enough? This was just a bull market correction back here in an ongoing bull market, and it dropped at that point in time 47%. So if we're in a great super bull that's going to just this bull market's going to go on forever without any real true ugly bear market, something that's 50% or more like the previous ones, then yeah, maybe the correction's over. But I don't see it here looking at this chart. I think we'll come down to at least that 94.70, call it $95 level there, and quite possibly more. I will say not one of my favorites. The other thing to note, you can see recently here, it took out the 200-day moving averages, these blue and red lines right here. It's been like many stocks since the bear market began. When you take those out and you trade under them, they act as resistance. And so we took them out, but then failed. The breakout, you can see here, I'll turn off everything. See how we failed that breakout above the 200s. And so these are the things I'm starting to see. It's again, kind of a slow roll in the market now, and still, like I said, you can be long certain stocks. Intel I threw out there the other day. I'll get to that one second. I'm just going to cover a few more here. AMD, negative divergence, about equal highs right there on price, right at about 88, 89, minor resistance, some divergence. Not one of my favorites, but just pointing it out, just kind of going over the charts for you, and making the case that you can say here's the primary bear market downtrend line. We took it out, but we're also struggling or testing the 200-day moving averages right there. And it's not unusual to see a stock move through the 200s for a little bit. Tech stocks behave very well off the 200s, so do the tech-heavy indexes. In bear markets, you trade below them, and then once you regain them, like right there, you're back in a bull trend. And they usually act as support. And once they're broken, you're in a bear market, and then the MO changes. Instead of buying pullbacks to those as support, you start shorting rallies into those. So we'll watch this. This one's above them right now. If it falls back below, you can see the PPOs in bear territory as well. This is a weekly chart I went to. Again, these are great indicators to look at and take it all collectively. You're never going to have, well, at certain times you will, check across the board, all bearish signals. Usually by the time you get everything like that, most of the move's over. But I can just tell you, we're going back here into 2014. This has been one of the strongest semis, and you can see the only time that PPO has been below the zero line is right here, and you would have been short or very glad to be out of your longs during that. We were below it there. It was not much, but we'll zoom in nice and tight. You can see, and again, look at the white line. That's the last of the two to cross. It said get out or be short. Get out of your longs or be short. And then long the rest of the time. I don't have to go over that. Long and strong. Buy pullbacks to it right there. But then get out and be short. And it's staying, by this indicator, it's saying, hey, it's still in a bear market or bear trend. All right, let's move on. Go through these a little faster. I won't cover so many weekly charts. Intel, I threw this one out recently as a long trade idea because it has positive divergence. I will tell you today, I had that up until today when I got that post out to you this morning. I've taken profits, even though we're shy of T1 and T2. It may still get there, but based on my overall analysis and the fact that birds of a feather flock together, if the semis roll over here, which is what I suspect, then Intel will probably fall short. It doesn't have much to go to get to T1. From today's high, we're just off today's high. It's only about another 2.5%. But to me, the way I look at it, very good odds that we'll have a reaction if and when we get there. So do I want to risk giving back profits to make another 2.5%? I didn't make that much on it. I got in it not at the very lows, but got 6 or 7% gain on it, whatever. I just wanted to share that. And again, like I said this morning, the only guarantee I'll ever give you guys is that in the markets or in trading or anything to do with this site, the only guarantee I ever give is that I'm going to be wrong, and I'm going to be wrong a lot. So if I'm wrong on the semis, and but you like what I'm seeing, or you agree the semis might drop and you want to hedge, well, this is one of the stronger looking stocks right here, because you have that triple bottom, near double bottom, really almost came there, and really nice basing pattern here. So if it works its way up to T2, you have positive divergence, boom, it's probably going to run and want to hit the bear market downtrend line if it breaks above this range. And I may revisit that if I pull the plug on these the semis that I am short, and we do get up there, market's rallying, everything's strong, you'll take out the 200-day moving averages as well, then that'll probably be my next buy point until it'll probably be a long trade idea there, especially after, if it even gets up to T2 and consolidates. Otherwise, in a bear market, the most bullish setups quite often just don't play out. It's they're bull traps. So we'll see if it plays out. Weekly chart. Remember, that's really good support right there. Really good support for Intel. But this weekly chart probably tells me it's going to do a little head fake here, take out those lows, may or may not undercut it, put in a divergent low. Again, we'll see what the sector does. And like I said, it's one of the better looking semis if you want to be long that, at least until you had more confidence on the shorts. If they start to pan out, you could always remove that long hedge. Applied Materials, AMAT. This is one of the big chip makers. And so if the semis are the canary in the coal mine for the tech sector, then the chip equipment makers are the canary in the coal mine for the semis. Because orders, when orders start to slow for KLAC and Applied Materials and those companies that make the equipment that make the chips, that tells you there's a slowdown coming. So we'll watch these. And this one, really flirting with this trend line now. Can't say that it's broken down. Can't say it's really right on it. But you have this negative divergence, which makes me think whether we make a equal high right here. There's good big resistance right here, by the way, and it already got rejected off that resistance. That's at 125. Look at that. It was resistance right here, back here, and then we broke above it. Back tested, a little whipsaw, but we back tested and then rallied back above it, and then boom, 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 gave it up there, couldn't hold it. And then once it was clear to the masses, that resistance level gave way. This is what the stock did, and we've come full circle right back to back test it recently. So boom, in my opinion. All right, ADI, analog devices, there's your primary uptrend line and a BOD, or benefit of the doubt trend line. This one just recently made a marginal new high, but as I often say, stocks that break out to new highs with negative divergence, and it did on the PPO, often typically have a higher failure rate. We made a slightly higher high on the RSI, but it was an extreme overbought high. Last time we were this overbought was right there, and you see what happened. The previous time before that, in the bear market, we were overbought right here and had this correction. Then go back here, that was the end of the bull market, and that overbought reading, it stayed overbought for a while, and finally, boom. All right. And that's one LRCX, Lam Research, negative divergence at resistance, 544.50, big resistance, recently got rejected off of. Uptrend line, bearish rising wedge, negative divergence, breakdown, and headed lower most likely, in my opinion. MU, Micron, not one of my favorite. I didn't even have that one starred. KLAC, the other big chip equipment maker, right there, negative divergence, nice clean uptrend line, breakdown, back test, moving lower, at resistance now. So there's another one that's shortable right now. Next target 355, and ultimately, if things get ugly down here, coming back down to about 286, 287 right there. Very likely longer term swing target, in my opinion. Let me just glance the weekly, because I haven't done that. Oh yeah, look at that big divergent coming off that divergent high on the weekly. and probably put a long-term uptrend line right here, which it's going to come and visit sooner than later, in my opinion, folks. Let's skip over that one. MCHP uptrend line, resistance right there at about 89.75, negative divergence, and that's it. I can go through this all day long. ENTG, Integris, if you turn off all the lines, what you're looking at here is the stock that's taken out the 200 days back here, and it's testing the 200 days from below right now. LSCC, Lattice Semi, you can set a trend line alert right there. Break of that trend line would trigger an objective short entry. Minimum target, in my opinion, would be right about here, 64.66, with a quite likely target all the way down here, $44. If that $44 target is hit, you're looking at a drop of about 50%. QRVO, right at uptrend line support and price support. Breaks there, it's headed down here. All right, I'm going to wrap up because I can go on and on and on and on. There's more components in here. I'll just finish with this one because I had this one flagged as well as one of my top picks. Resistance, about 762. It's a lower price stock, so be careful with that. ASX, you had a beautiful little bearish rising wedge, complete with negative divergences. It just broke down, and it's back testing that resistance, so probably going to head lower. Targets, I'm giving you targets, 690, 615, and then maybe some more. You can see, like many, this one ended with a nice divergent low recently, which was a catalyst for this rally. But bigger picture, we are in early stage. This one doesn't have a lot of price history, so I'm not going to look at the weekly. I'm going to wrap it up here. All right, guys, that's one of my favorite sectors right now on the short side, and you have some of my top picks within that sector if you want to go with the individual ones. And yeah, that's it. I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.